Hello, everyone. My name is Fiza Qureshi, and I'm currently working as an assistant professor at Southampton, Malaysia Business School, University of Southampton, Malaysia. My field of specialization is finance and financial market. Today, I will be giving my research presentation on the topic sustainable finance and future economic expectations. Let me share my screen with you. Now, this topic basically comes under the broad area called sustainable economics. Just to give you a background, sustainable economics basically focuses on all those activities that supports the long-term economic growth and development without harming the social, environmental, and cultural aspects of community and society. Sustainable economic includes the concept of green economy, which entails the low carbon economic growth, resource efficient economy that also encompasses the social inclusivity. The basic idea behind the sustainable economics or economic sustainability is to devise policies in such a way that helps to efficiently utilize the resources and minimize the cost to produce the goods and service without harming the human well-being, social equity, justice, and environmental and increasing environmental risk. So, to counter the increased risk related to human, social, and environmental, a concept of green economy emerged that actually focuses on optimizing the resources in such a way that leads to the sustainable growth and development. Just to give you a background, nowadays, many industries and organizations across the world are transitioning from the traditional way of doing the business to the more environmental friendly and value created activities. This kind of concept has started to establish in a greater extent after the UN supported network of investor in 2005, where they came up with the idea of incorporating the principles of responsible investing or sustainable investment practices in the or the ESG framework into the investment decision making process. On the right hand side, you would see that the picture or the figure actually shows the number of signatories and the assets under management has phenomenally grown across the various economies and countries from the past 1.5 decade. Just to give you a concept of what the sustainable investment is, the sustainable investment actually refers to all those financial assets or products or securities which are actually offered by those companies who strictly follow the sustainable or ESG investing strategies. ESG assets under management has phenomenally grown uh, and is estimated to be 35 trillion in 2020 and is expected to grow uh, 50 trillion by 2025. It is also witnessed that this growth is going to be more than double in 2050, and at the moment the sustainable investment characterize more than third share of the total estimated global assets under management. Now, what are the basic issues that we have highlighted in this research? We know that at the moment, many economies and industries are planning to transition from the traditional system to the more environment friendly system. However, they are not really prepared from based on this growing transition and based on the various pressures coming from the various stakeholders. Many businesses are actually combating to meet the sustainable development goals, and they are really trying their level best to find out the balance between the value creation activities and the profit maximization activities. So, on the basis of this background, our research objective is to find out the relationship between the sustainable investment and economic growth. Particularly, we focuses on we focus on determining or analyzing the interconnections between the ESG investment and economic growth. So we ask these three questions. Number one, is there any interconnections or interrelationships between the sustainable investment and economic indicators? And if we find yes, then we ask the second question, that sustainable investment can affect the short term or long term economic growth, and whether the sustainable investment trends or patterns contains any future economic information. Now, the prior research has mainly been conducted on the financial markets and economic growth, and the evidence suggests that financial markets and economic growth are highly interconnected. There is also evidence which suggests that the investment patterns and trends in the financial markets or the investment helps to determine the macroeconomic risk. Also, it is witnessed in the prior literature that unexpected economic shocks may also affect the sustainable business policies and strategies. So, based on this problem statement, we also identified that majority of these studies have been focused on determining the risk and return relationship of various sustainable securities at the firm or individual level, whereas no such study has been conducted to examine the interactions of these sustainable securities at the macro level according to our best of knowledge. Therefore, our study contributes in the existing field of research. We extend the prior research work and identify the linkages between the sustainable investment and economic variables. We show various comparisons between the popular sustainable investment class with the economic variables to find out the performance of these investments at the macroeconomic level. We also apply the time frequency analysis to examine any short run or long run connection between the sustainable investment and economic indicators. Lastly, this is just a figure to show you that ESG scores relationship with the per capita gross national product, gross national income. So you can see from the figure which shows that correlation between ESG scores and the gross national income per capita is evidently higher in the upper middle income and developed countries as compared to the middle income countries, which suggests that the ESG framework is quietly influencing at the economic growth or the sustainable economic growth. And based on these expectations and predictions, we try to conduct this research to identify whether the ESG and economic growth, how much proportion of them are highly influential, and which securities in the market has a greater impact on the economic indicators, or it contains some information for the future economic conditions. Thank you.